Guys, I want to share one stock that is very close to breaking out, but that's not why I'm sharing it. I'm sharing it because Nvidia chooses them as their case study for autonomous robotics. And the ticker symbol is SYM. Don't get confused by the ticker down there. This stock is holding up after earnings, which is something most stocks can't say after this Q2 earnings season. And that's bullish. It hasn't taken off yet. Nvidia highlighting them in a case study is a massive vote of confidence. It's not just that they use Nvidia GPUs. Nvidia actually chose them as you could say they're basically the figurehead in this sector of use cases of Nvidia GPUs. And I wouldn't say there are more than a dozen companies that Nvidia chooses in this manner. So let's look at the technicals, because it's not just the Nvidia connection. Nvidia could put their weight behind a lot of brands, a lot of public tickers, and it wouldn't move the needle in the way that this company is setting up to break out. Based on the volume, based on the price, based on recent news. I want to jump into all of that in this short. I'll try to keep it as a 5-minute video. So respect your guys' time, respect my time. And I will share with you a day trading case study at the end. This day trading case study free training is available. You just enter your email, and it's a verified $9 million day trader. I wouldn't just share any case study with you. This one is pretty unique, top 3 in the world on a publicly accessible day trading leaderboard. So let's jump into SYM. That's why you're here. That's the Nvidia stock. And without further ado, this is what the chart looks like. It's pretty strong. You can see there's some volume when it first started to break out here in mid-June. And there was a significant volume bar on the earnings bounce. Okay, so that's an important distinction. It was on this day. So earnings were after hours and the reaction was poor, right? But we have seen a number of stocks report earnings and then sell off. Okay. TTD is the example I always use for this earnings season, which always, I mean, within the past week, this happened. And it just sold off on the next day and has drifted lower following that. We have been looking at some other stocks where the earnings reactions have drifted down and that then turned up. There have been other ones like SoFi that looks like they were going to start to break down after a failed earnings reaction and actually held up. So when you look at all of these sort of lackluster earnings, and you start to see a small handful of companies having earnings where it looks like it actually, might be okay for the company. These are basically the 3 scenarios for earnings. A stock goes up, a stock goes sideways, or a stock goes down. And in the case of SYM, the stock did have a slightly negative earnings reaction, but it stayed at the level that it's been at for the past month. And this is a unique earnings reaction within the last week. So extended earnings reaction, earnings move, you could call it, following the initial day, that I think bodes well for the technicals of this chart. It's not as simple as just saying the earnings beat was this, the guidance was this, because as we know, funds, institutions sell into positive earnings, and sometimes the stock will go down after positive earnings numbers. And so what we look for as short midterm investors is for stocks that we think are going to go up. And the way we have to do that is based on what's actually happening, what we see in front of us, not what the numbers are that are publicly available to any LLM, any junior analyst, any senior person who's been doing discounted cash flow valuations since the 60s, right? We just look at what the chart's going to do. So we'll jump into some news, some fundamentals on SYM, particularly around that NVIDIA partnership. So what does that mean to say a company is partnered with NVIDIA? Well, this isn't a partnership. This is more like a partner in the sense that SYM was selected as a use case. They use NVIDIA's GPUs in at least some of their AI-powered robots, okay? That's the quote from a NASDAQ article. I don't think that's particularly interesting at all. I mean, the whole point of NVIDIA being such a high-value company is that a ton of companies are using their chips. But the fact that NVIDIA highlighted them in like basically a white paper, article, it's a blog, but I mean, they still chose Symbiotics. So they're using NVIDIA to improve distribution center throughput, and particularly through autonomous guided vehicles. So what does that mean? Well, distribution center throughput is essentially what I think of Amazon, right? Amazon warehouses and autonomous guided vehicles. Think about, robot packers moving boxes around. So, computer vision, robotics simulations, edge AI inference. Inference is going to be a big, hot buzzword in the next coming years. We have all this training and chips designed for training, and now we need chips for taking existing models, and you run some data through it, and you need an output. Well, that's what an inference model will do. So if SYM is important for this use case in what is a growing need, which is these inference chips, and NVIDIA is highlighting them, it lends some credence to the supposition that SYM will grow with NVIDIA. Do we expect NVIDIA to grow? We do. NVIDIA has grown a lot, but there's been a trickle-down effect as well. And I think SYM could be one of the benefactors of that. So what else do we know about NVIDIA's partnerships? Well, we know that they don't always take off immediately. NVTS is the big NVIDIA partner in terms of clear partnership, and NVIDIA is actually invested in NVTS. But what we need to look for is not necessarily which stocks NVIDIA is invested in, which stocks are quote unquote collaborations with NVIDIA or owners of NVIDIA chips, or competitors of NVIDIA. Even AMD is taking off recently, probably going to break out in the next week over this level of 186. What we need to know is that NVIDIA selected NVTS, okay? The semiconductor. This is a partnership, okay? The terminology is incredibly important right now because there are so many companies that say, particularly small microcap companies, they're partnered with NVIDIA. But as an example, with NVTS, NVIDIA selected NVTS to provide advanced power semiconductors for its next generation 800-volt high voltage direct current architecture, HVDC, for AI data centers, high efficient power delivery systems. So think the special power lines that need to be built out in order to supply data centers. And data centers are going to take up like an extra 5 to 10% of the US's power. So this is an insane amount of additional power supply that is required to be added. And NVTS had a huge jump, okay? Now, since then, it's sort of drifted up. Earnings reaction was muted, was fine. But, this is just an example of a company that's, I need to delineate clearly. It's not that NVIDIA invested in NVTS, okay? NVIDIA selected NVTS as a partner for a specific NVIDIA product, okay? And then over here with the stock that I think has the greatest potential at this moment in time and in the next couple few days to week, Symbiotic, NVIDIA noted them as a prime, publicly listed company, a prime user of NVIDIA chips, okay? So this isn't just a little, white paper thing, some research lab. This is a $600 million a year revenue company. That revenue is up 25% year over year. And they're guiding higher than that slightly. So just because stocks fell about, whatever it is, this is like 10%, 15%, 65 to 55. We can see it on the chart. It's holding. It has that NVIDIA news. So the sell-off could have just been some profit taking after this premature move. Sometimes stocks do get bought up into earnings. And if it holds this pivot, this is the important thing, risk reward. I don't have to be a, wizard or genie or anything. It's just that you can see such a pattern where as long as you risk like 50 cents a share on this stock, there is the opportunity for more than $10 of upside relatively quickly. It doesn't even have to be a true breakout, even if it just performs one of these 10 to 15% moves, a couple days or a day or two or three. You can trim most of your position. You can get a crazy 20-to-1 risk reward trade on an NVIDIA highlighted. NVIDIA chose this company. It's at a great point to buy. The earnings reaction is over. You don't have the earnings overhang, and it's real, almost $600 million and guiding above that revenue. So that's the argument for this stock. I do think it is in a better position at this moment in time than a true NVIDIA partner, NVTS. So, I just want to be careful with the verbiage there. I think Symbiotic, you want to check out. You want to take a look at the volume as well, see how that holds up into Monday's session, Tuesday's session, and beyond. NVTS, could be a great buy in the future, but we're not long-term year to 2 to 5 investors here. We're taking a measured approach to crafting a portfolio that makes sense for this exact moment in time. That's what we do. So if you want to talk about your portfolio, there is a link down below to talk with me, ask me questions. It's at selfadvisors.com. It's a calendar link down there. If you are interested in a more aggressive approach to growing your assets, whatever they may be, generally day trading is more attractive to people with less assets. However, there are some individuals who find an edge and are really well versed in filings, so they can find an edge on the short side to some of these companies that, for example, say they're NVIDIA partners and just bought a GPU or two, or 1,000 even, which isn't really going to make them a profitable company in and of itself, even though it might be an indication that they're an AI company in actuality. So all that to say, there is a link down below for the Aikido trading method. I'm actually going to log into this day trader's broker right now. He's a $9 million verified day trader. You'll see a $30,000 trade execution in this next 1 minute, 2 minute clip. And without further ado, hit that subscribe button if you want more timely stock ideas, and take a look at those links if they suit your goals. All right. Here's me logging into Adam's broker, and Adam will give you a short pitch on his life's work. You guys are awesome. Thanks for checking out this free training. I'm here with the lead sensei of the Aikido trading method, Adam Geffert. I'm just going to log into his broker very quickly so you can see that his results are real. This is his Guardian broker. He does have more brokers than this, but you can see that he's made about $4 million net.
Yeah, Guardian's been a good broker for me. And in this quick video, I'm gonna show the viewer how to trade. Show him a little taste of the Aikido trading method, method that I've. So let's start with the times to trade. The best times I think to trade are on the pre-market and after hours. The stocks move differently than market hours because there's less traders at that time, and also you can do it in those hours, and it won't disrupt a day job or it won't disrupt things that you might want to do during the day. And let's take a look at some of the trades I actually did today here. I'll share my screen. So these are some of my brokers here. They're all brokers that where you can short microcap stocks below 50 million market cap, nano cap, and microcap. And here's a trade I did today. This is KTTA. So I made about close to $30,000 on this broker with this one. And I started out in the pre-market after the news hit at around 7 a.m. I shorted it, then I covered.
And if someone's interested in learning more, how can they reach out?
They can go to AikidoTradingMethod.com and click on the free training, and there's some links on there where you can go and you enter your name and email address, and that actually goes to this video right here. But what we'll do is we'll email you and tell you the next steps to learn more about the Aikido trading method.